Traders, you are pretty much screwed because there are so many strategies out there. How do you know which one is right for you? Well, let me help you guys because we are going to look at some of the most viewed, some of the most trending strategies online to see if they actually work and if they are right for you. So let's get into it. Traders, unless you've been living under a rock, maybe some of you have, then you've probably heard of smart money concepts, right? If you're learning how to trade and you've been scrolling through YouTube, I promise you, you have seen smart money concepts, right? It's a methodology and a way of how to trade the markets, okay? Now, I have had so many messages saying, Tom, can you look at a strategy that involves smart money concepts? Because I find it so confusing, right? Now, it is, right? I'm fully aware of smart money concepts, and they do overcomplicate something that is quite simple, right? They use terminology like order blocks, fair value gaps, liquidity grabs, right? So we are going to look at these terms, right? And understand what they actually mean and just simplify, right? You don't need to know all that pointless jargon. It annoys me. Right. And to help us do this as well, guys, we're also going to take a look at this guy here. Right. So this is the Trading Geek, and he has a very, very comfortable looking hoodie. Right. And he claims that his video, which we're going to look at very shortly, is the ultimate smart money concepts trading course. You will become an expert instantly. I love claims like this on YouTube. You will become an expert instantly. But, you know, let's listen to the guy because he does try and simplify smart money concepts. And like I say, this is the Trading Geek. He's got over 1.24 million subscribers. This video itself has almost 900,000 views with over 1,000 comments, right? So a lot of people have used this to understand smart money concepts, right? And like I say, guys, he wants to simplify it as well. So we're going to take a look at this vid at some of the key concepts when it comes to smart money. And then at the end of the vid, guys, stay tuned because I'm also going to apply some of these concepts onto the live charts and also simplify, right? So that's what we're going to do. But let's start off by listening and taking a look at this video, guys.
You will finally understood smart money concepts after watching this video. So in this video, I want to simplify smart money concepts in a way that even a 5-year-old kid can understand. Most of the
Okay, so he's going to simplify it so much that a 5-year-old child can understand it. If your 5-year-old child understands this, you have a genius. But what we need to know, guys, is just smart money concepts, right? So let's get into that.
A profitable trader. So firstly, let's talk about boss or break of structure. So in an uptrend, price will be looking like this. You'll be making your higher highs and higher lows. Every time price breaks through a new high, this is what we call a bullish break of structure or BOS, boss. So there's a break of structure here, there's another break of structure right here, and another break of structure right here whenever price breaks the previous high. So at some point of time, price will eventually lose momentum and start reversing in the other direction. And for this reversal to be valid, price has to break the previous higher low. So this is the previous higher low and price has to break below it for it to be valid. So what is this?
That is not the previous higher low, right? That is the previous higher low. And he's explaining when that level is broken, we have a change of structure because we're getting lower lows.
Move has happened. This is what we call the chalk, or rather a change of character, chalk. In order for this chalk to work, we want this previous high to be an area of interest, like either a supply or demand zone or an order block. So the stronger the zone, the better it is, right? The better this chalk will work. Once we have a change of character, the chalk, and an area of interest, your supply zone, we can expect price to reverse and start going down. And then as it starts to go down, it will create your lower highs and lower lows and lower highs.
Right, so guys, this is just simple price action, right? If you don't understand this, stop trading immediately. This is just, price action trading 101. Yeah, so we're in an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We're in an uptrend, right? And price typically, reverses trend, or we have a breakdown in structure when we're at an area of interest, as he calls it. Now, he calls it a supply zone, right? So some people call it, a demand and supply zone. Some people call it an area of order blocks, right? That's a smart money concept. Some people just call it support and resistance. Now, it doesn't matter what you call it, right? If you call this important level a supply and demand zone, or you call it an area of order blocks, or you call it support and resistance, it is irrelevant, right? It's just an area on the chart where price has reacted previously, and therefore it should react again at that level, right? I call that support and resistance, okay? And then commonly at these levels of support and resistance, you end up getting a break of structure. So when we break this low here, right, and price comes down, we start to make a lower low, lower high, lower low, lower high. And therefore, we're now in a downtrend, okay? In an uptrend, break this low here, it therefore becomes a downtrend, right? Simple as that, guys. So what's the next concept we need to understand?
Price will move in the direction that you want it to. Now, what do I mean by strong area of interest? There are two methods that you can use. The first method is what we call the liquidity grab at a supply or demand zone. Firstly, you need to identify a strong supply or demand zone on the higher time frame, like the 1 hour time frame or above. So the higher the time frame, the stronger the area will be. And what you want price to do is your liquidity grab. So what is a liquidity grab? A liquidity grab is basically a forced breakout, right? In this case, where price breaks through a recent high or low, does a fake out like this, and then reverses in the opposite direction. So the psychology behind this liquidity grab is that people will be entering for a sell when price breaks through the recent low, because this is the recent low, and when price breaks through the recent low, the sellers will be selling down because they think that this is a downtrend, right? So when they enter for a sell right here, they're going to be placing their stop loss above the last lower high, which is right here. So if price end up doing a false breakout and price actually comes up, it will hit all their stop losses, adding fuel to the fire and increasing the momentum, causing price to shoot up. So we can take advantage of this by entering for a buy position.
Right. Okay. So let's just understand a liquidity grab, guys. Right. So this area here, right, is a support level. Okay. Right. But the market is trending downwards. Okay. And what he's saying is that price has broken this level, and therefore we want to keep on selling. Right. Now, this is all about time frame. Okay. Now, really important, areas of interest that he calls them, right? I call them support and resistance levels. Really, the big levels that the big boys are looking at are daily levels. Okay. They're not looking at H1 levels, right? They're looking at daily levels. Okay. So let's assume this is a daily support level. Now, firstly, I am not going to be selling into this level. And even if it breaks it, I'm not going to be selling, because I want to see how the daily candle reacts at this level. Okay. Then I will make a decision. Okay. But his argument is valid, right? If you're just trading the H1 and you see a break of these lows, you see a retrace into what was once support becomes resistance, we start selling. We put our stop loss above here, right? And because it is a liquidity grab, we eventually get stopped out. But my point is, if you're on the H1 and this is a daily level, let the daily candle tell you what to do at this level, not H1 structure or trend. Okay. Again, I will explain this in detail on the charts later.
somewhere right around here and make money as price goes to the moon. The second method to find a key area of interest is by using order blocks. So an order block is basically an area where the smart money and big banks likes to enter and exit. So how do you spot order blocks? You spot order blocks by looking for strong reversals like this and this and this. You can see whenever price goes up here, it'll reverse down strongly.
Again, guys, there's no need for all of this jargon, right? An order block. An order block basically means a block of orders. It means there's going to be a lot of volume at that level, right? There's a lot of orders, therefore there's a lot of volume. And then you will get a strong move away from these levels. But all they are support and resistance levels. Don't confuse it, right? This area right here, right? Again, if this is the H1, right, this would look very different on the day chart, or the H4. But generally speaking, that is just an area of resistance in this case, right? Price come up, tested it once, resistance, come up again, resistance, resistance, hit again, resistance. And this time, right, it breaks down. Okay, because we have a structure break. So don't worry about all of these, all of this jargon, order blocks, liquidity grabs. And again, guys, I'm going to simplify it all later. Now, it's the same. This line here is saying is an order block. I don't disagree with him, right? There will be a lot of orders sitting in here. So why are there orders sitting in there? Because if you look to the left, it was previous support, 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 support. So people know that traders here will be potentially entering buy trades, because by the very definition, a support level is a buying level. That's where buyers enter the market. And that's all that an order block is, right? It's an area where lots of people are trading from because they have seen that previously people have traded from that area. And that, in my book, is called a support and resistance level, right? So obviously, when price gets up to here, you want to look for sells, right? The entry trigger, etc., will be explained later in the vid, right? And when you get down to here, right, you want to look for buys. It's support, right? And that's all order blocks is, right? There will be a lot of orders in here. There will be a lot of orders up here, okay?
And when price come back down here, it reverse back up strongly. So this level right here and this level right here is what we call the order blocks. Now let's
support and resistance.
Combine whatever that we just learned, and I'm going to show you a high win rate smart money trading strategy. So for this strategy,
okay, so he's going to put everything that he's just shown us into a strategy. One thing he hasn't mentioned yet are fair value gaps. Now, he does go on and mention them, but excuse me, guys. Generally speaking, smart money concepts is liquidity grabs, order blocks, and these fair value gaps. And he's going to show us this in his strategy. So let's take a look.
Make sure that you are using a higher time frame, like the 1 hour time frame. The first thing before
the H1 is not a higher time frame. Again, with any strategy, guys, you want a higher time frame to give you direction, but really we're looking at daily or H4. H1 is not a higher time frame unless you're scalping on the 5-minute chart, right? So disagree with that point, but let's carry on.
Before you do anything is that you want to mark up your key levels or supply and demand zones by finding where price is reversing or respecting. Right here, whenever price goes up here, it always collapse one.
Yeah, so again, guys, just to reiterate my point, it's a support and resistance level, right? It was resistance, resistance, resistance. When price breaks it, it becomes very good support, 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 right? Support and resistance level, supply and demand level, order block level, it is irrelevant, right? It's just a price where it's just a zone where price reacts, okay? And this is what he's marking up now. And to do that, guys, basically you're just looking where price has hit an area many times, right? It's not complicated.
Time, 2 times, 3 times, 4 times. So this is a very strong supply zone. And I can draw another demand zone at this key support area right here.
Support
So
zone.
now I'm going to show you this strategy on GBPUSD, the Great British Pound against the US dollar. We can see that there's a support area right around this area here. Because whenever price come back down here, it always reverses, come back down, reverses. So you can see price has just been respecting this support level or demand zone, whatever you like to call it. And over here, price gave us a liquidity grab. So the first thing you want to look for is for price to give us a liquidity grab or a false breakout at a supply or demand zone.
Okay, so yeah, we've got this liquidity grab here, right? Which basically means, you've got the idea of a liquidity grab is this, right? The big boys know that there are buyers in here and there are buyers in here. So the idea is that people, retail traders, right, buy at this level, right? Or buy at this level. And where do they put their stop loss? They put their stop losses down here somewhere, right? Okay. For price to move up. Makes perfect sense. Now, the big boys know that everyone's stop loss, every retail trader's stop loss is in here. So all they do is come down, take out all of these stop losses in order to build a big buy trade, right? So for buyers to exit the trade, as in get stopped out, there's lots of selling, right? And therefore the order becomes big enough for the big boys, the banks, the hedge funds or whatever, to start buying all of those sells. So they can build up a big enough position to trade. And this is what is happening here, right? We don't know if this is a liquidity grab. We don't know if the big boys are buying in here, but it looks like it is, right? So yeah, liquidity grab.
Zone, which is exactly what price gave us here. Price broke through the support level and then it just went back up. So this was a very clear false breakout, or what I like to call liquidity grab. Now you can even mark up your break of structure here, and the next thing you want to look for is a change of character. Price must make a change of character after the liquidity grab.
Change of character, what a load of crap, right? It's just a structure break, right? In those higher highs, higher lows, or lower lows, lower highs, when you break one of those levels, it's a structure break, not the terminology smart money concepts use. Ignore that.
Do not take that trade if there is no change of character. So it's very, very important that you look out for a change of character after the liquidity grab. So I can spot a change of character right here, because this is the last lower high before price collapse. And then at this point,
no, it's not, right? It depends on what time frame you're looking at, right? If this is the H1 chart, this may well be the last lower high on the H4, right? But on the H1, it isn't, right? If we follow H1 down, you can see we've clearly broken these lows here, and therefore this is the last lower high, right? So I would be interested in a break of this level, which we do get. So I would have got into this trade a little bit earlier. And this chalk crap, it's just when this last high is broken. So I totally disagree with what he's saying here. That's the last high. This is where we have our structure break. Okay, this is where we're interested in entering the market. Okay, again, I'm going to show you how to simply do all this later on in the vid, guys, on the live charts. But let's carry on.
Of time, this is when price has broken the last lower high, breaking structure, causing a change of character. Now next, when do we actually enter for the trade? We enter when there is a fair value gap. Now, what is a fair value gap? A fair value gap is when price goes up or down so fast that it doesn't give buyers or sellers enough time to enter the market. Therefore, it creates an imbalance in the market. So price will usually come back up or come back down to this fair value gap and reject it. And that is when you can enter for the trade. So you can mark a fair value gap by using a rectangle tool to mark the previous candle's wick before the big move, and then taking the next candle wick after the big move. So right here, this will be your fair value gap. So
right, so let me go back here, guys, right?
And then taking the next candle wick after the big move. So right here, this will be your fair.
Right, so this is your fair value gap, right? I mean, the problem with it is, right, I understand lots of orders haven't been filled, right? So when you get these big moves up, right, lots of buyers and sellers haven't been able to get into the market, right? Because it just pushed up so quickly. So the idea is it will pull back into this fair value gap, and then that will be a great opportunity, for buyers to get back in. Now, look at the size of this fair value gap, right? Then, this represents a problem when it comes to stop loss and, well, your stop loss, right? He's saying, you can enter in here, right? But where'd you put your stop loss? Down here, right? So we need to understand that better. And we'll also plot a few fair value gaps on the chart as well. But I'm going to show you how you don't need fair value gaps, right? You need areas where the chart reacted previously. Okay, but we'll take a look at this in more detail as well.
Value gap. So there are bullish fair value gap, which is basically a big fat green.
Yeah, so here, guys, right, you've had, just to understand the big a fair value gap, right, we've had this big bullish candle, right? There's this area between this candle, right, and the low of this candle, right? So in here is potentially an area where we can enter, right? There's some value in here in terms of orders. There's lots of orders sitting in here, okay? So, and you can see price pushes on from this level. But again, a fair value gap, that's what really causes the confusion with a lot of traders trading smart money concepts. And I'm going to show you a way that you don't need to worry about fair value gaps. Even during this video, he is quite vague when it comes to fair value gaps, right?
Candle, and there is also bearish fair value gap like this big red candle right here. So back to the example, you want to enter for a buy when price has came back down to our fair value gap. So in this example, I can spot a fair value gap right here. You can see right here there's a fair value gap, and right now what we want to do is to wait for price.
I love the way you just go, you can spot there's a fair value gap. Can we? Right? So again, we've had this big candle push up, right? There's a bit of a gap between here and the close of that candle, and that's what constitutes a fair value gap, right? Very vague.
Price to come back down to retest this fair value gap, then that is when we can enter for a buy. And the reason why I mark this as the fair value gap is that if you look towards right here at this candle here, price went up super fast, right? Went up super fast, gave us a big fat green candle. This candlestick wick, the next candlestick wick, and the candlestick wick before it, I marked up the entire box, giving us the fair value gap. So I want you to know that price can come to the middle of the fair value gap, reject it, and then continue going up. But at the same time, remember, price can do anything it wants. So price can also touches the fair value gap, which is like this area here, just touches it and just reverse and head back up. So if you were waiting for the price to go to the middle, you have missed out on the trade. So ultimately, it's really up to you on which way you want to do it, right? There is no right or wrong answer. So
I would say there is a right or wrong answer. He's saying, look, sometimes you can enter here, sometimes it happens at the middle. I would even say you might have got stopped out here, right? So again, we're going to clarify this and make it simpler later. But just to understand that is a fair value gap, and that's where we trade from in terms of smart money concepts. It's not where I trade from, but it's where smart money concepts trade from. But again, another thing with this, guys, is right, they at the start of the video, they spoke about trend, right, and structure. So even when we come back to this level, look at the structure of the market. It's clearly downtrending, right? So you're going against trend and you're going against the idea of structure, right? So a lot of gray area there as well. But let's carry on. Let's listen to him.
So in this trade, I will have entered for a buy right here when prices came to the middle of this fair value gap, and it's showing me some sort of signs that it's going to reject it and head back up. And I'll place my stop loss below the fair value gap, and I'll place my take profit at where price last stopped at. If you look towards the left, there's a little.
I love this. I love people putting in these positions after the fact. Right, they're like, right, I would have entered here. I would have put my stop loss below the fair value gap. And just by chance, I would have put my stop loss below this wick as well. Oh, that's convenient. And then I would have taken profit back up to these highs. You need, you want it in real time, right? Chances are, if you put your stop loss below the fair value gap, you would have got stopped out there. Okay, but let's carry on.
resistance area being formed right around this area here. So that is where I should place my take profit. And as you can see, this was a 1:3 risk to reward ratio trade. Very, very beautiful trade. And the thing about trading fair value gaps is that you are able to get those nice sniper entries, which will give you a high risk to reward ratio. This trade smashed our take profit right here. Very, very beautiful trade. And the next thing I'm looking for is another trade. So to show you this strategy works, I'm just gonna be continue using this strategy on this chart. So let's wait, and you can see at this point of time, price created another resistance area, or that's rather a supply zone, and it gave us a liquidity grab right here when price broke through.
There's no context here, right? We don't know if that's a liquidity grab. We need to see what's gone on over here, right? We don't know if that's a liquidity grab, okay? But let's carry on.
Resistance, and then it came back down. So this was a false breakout. So this is a liquidity grab. And the next thing you want to look for is a change of character. This is a change of character right here, because this is the last higher low before price goes up and like failed to break past, right? So this was a little change of character right here. Price came back down, broke through the last higher low, giving us a change of character. So the next thing I want to do is to mark up my fair value gap, and I can mark up a fair value gap right here because I saw there's a huge push down and there's a big red candle here. So I'll mark my fair value gap right.
Again, just a couple of things here, guys, because, you know, this smart money concept is starting to slightly annoy me. So first and foremost, right, I agree, right? This is in an uptrend, and really this was the last significant low. So there's your break of structure, right? And price eventually breaks it. Now, I would be looking for sells as well. If this was an important daily resistance level, okay, and we're currently trading on the H1, for example. Now, before we even get to this fair value gap over here, I tell you what is a wonderfully beautiful setup is this, right? That once we break the last low, right, and price comes down, when it retraces to it, that becomes a very nice area for selling, regardless of fair value gaps. That is just simple support and resistance, structure break, retrace into value, and then we can sell from there. We would have already made some money on this trade before we even get to this fair value gap. All right. And again, I'm going to show you this on the live charts, but let's carry on and just listen to, let him play out a couple of examples.
Here, and you can see prices went back up to retest the fair value gap. So this is where I will enter for a sell position. When prices came back up to retest this fair value gap, enter in the middle of this fair value gap, place your stop loss above this fair value gap, and take profit all the way down at the next key level. And I can see there's a support level right here. So I place my take profit right there. And once again, this was a very, very beautiful trade. We end up smashing our take profit on this trade. It's really, really as simple as that, guys. I know that a lot of YouTubers, a lot of people on YouTube have been trying to make smart money concepts very complicated, very, very hard to understand, so that you guys can buy their course. And I'm telling you, it's complicated, but it's not that complicated. It's still doable, all right? It's still doable.
Well, I can't listen to any more of this. He has made this complicated, and he's been a little bit vague when it comes to fair value gaps. He said, this is a liquidity grab, is it? Right? This is a fair value gap. They're so open to, interpretation, right? Because I'll tell you one thing, there's lots of fair value gaps indicators. And when I put these when I was testing this video, this strategy, and I was putting fair value gap indicators on my charts, they varied, right? So what is a fair value gap for someone is perhaps not for someone else. So what I'm going to do now, guys, I can't listen to any more of this. What I'm going to show you is incorporate some of smart money concepts, right? I'm not saying the ideas are wrong. It's some of the execution and the terminology is just confusing and unnecessary. So I'm going to simplify all of that on the live charts with some live examples. And he's been using pound US dollar. So we're going to actually use pound US dollar as well and show you, some of the smart money concepts along with price action and just using price action to simplify what you're actually looking at. Because all this order blocks, fair value gaps, liquidity grabs can all be easily explained using price action. And I'm going to do that right now on the charts. So let's take a look. Traders, before we take a look at the charts, please don't forget to subscribe to the channel, smash the notification button, and please smash the like button. Also, don't forget to join our trading community of like-minded traders. You can share knowledge, ideas, have a chit-chat. So please come join our free Discord channel. Also, guys, if you want access to all of our premium trading education, including the Simply Forex trading course, the VIP Trading Academy, and the mentorship program, then please check out our website, www.simply-forex.com. All the information is in the links below. So, guys, let's test these smart money concepts. Now, the first point that he made was pinpointing these areas of interest, right? He called them order blocks or supply and demand. I call them support and resistance. And to do that, I am going to use the daily chart, right? Because that's really the big important levels that the banks and the big boys are looking at in terms of where they can do a liquidity grab. Okay, so we're just going to put in some areas that we're interested in. Okay, there's one. You can clearly see prices reacting through here, right? It's reacted in the past. It's reacting more recently, right? Okay, there's a level through here. Okay. There's a bit of a level just through here. Okay, and that will do us, guys, right? So we're only going to look at this piece of chart anyway, but I wanted to scroll left just so you can see how I'm putting these areas in, right? And I'm just looking to see price react many times at this level, okay, as it did up here. So these are our areas of interest. If you want to call them an order block, if you want to call them supply and demand, if you want to call them support and resistance, you fill your boots. If you want to call them pink unicorn levels, no problem. It doesn't matter. These are just levels on a chart, right, where price has been reacting historically, and therefore it could react again at that level. That's it. Okay, so these are our areas of interest. Now, let's drop down to the H1 because he was typically entering on the H1, right? And okay, so let's look at this part of the chart here. We've got our two areas of interest right up here and in here. Now, let's look at the first area, guys, right? So let's look at the first test of this level. Actually, let's look at this test of this level, right? Because this, he would argue, and smart money concept people would argue, that this is a liquidity grab because it goes above the support and resistance level, the area of interest. So they would say, oh, that's definitely a liquidity grab. Okay, it might be, right? But my point is, you're also going to get levels, right? It tests it once, price comes back up, it tests it again. This area here has not come out of the level. So is this a liquidity grab or is it not? I would suggest it isn't. Whereas this has come out of the area of interest, right? And therefore is a liquidity grab. I would say it is irrelevant, right? Both of them, right, have a very nice bearish reaction and come down to the next area of interest, right? So don't worry about, too much about the liquidity grab as it left the area of interest. Is that liquidity grab? Isn't it? Now, I'm going to explain why that isn't important. Because with both of these trades, what is important is the structure break. Now, let's look at the first example over here, okay? Now, if we just follow trend and structure, this is pretty much where we are on the H1, right? So we know that this level through here, right? Once this level breaks, okay, that would be a pretty good area to enter, right? Because I totally agree with smart money concepts and we need to wait for a break of structure. what do they call it? They called it a chock, a change of corrector. You know, like who comes up with this crap, right? He was just trying to sell courses, I'm sure, right? So it's just a structure change. It's where the uptrend breaks and becomes a downtrend. Simple as that. Okay. Now, when we get a break of that level with this candle here, I would suggest you can start selling, right? Put your stop above the swing high, put your stop loss up here, and look to take price down to these lows. Okay, that's what I would do. Okay, so if we look at that in terms of a short trade, let me just get the right one. Okay, we would enter there, our stop would be up here, and this would be our take profit down in this area of interest. Okay, so not, you know, using a couple of smart money concepts, this would be a nice trade, right? You get about 1:2 roughly, right? But I haven't looked at fair value gaps, right? Again, I would argue you don't need them, okay? Now, so with a lot of the things that smart money concepts do, I agree with, right? Let me just remove this. You need an area of interest, okay? We have our area of interest, okay? We also need a break of structure, okay? So smart money concept says that as well, right? I totally agree, right? We get that break when we break this low. So we need an area of interest. We need a structure break, right? Once price bounces off that area of interest. Once those two things are, you know, ticked, we can trade. As simple as that, right? Now, that's also the reason why a liquidity grab is not important, right? So if we go to this example now, okay, right, we are in H1 uptrend, right? Structure is like this. I would say we have a structure break here at this low, right? But let's carry this along and just say this area here becomes a more substantial structure break, right? So if we go back in time now, guys, right? All I would do was this, right? Is put my area in, okay? And I would say to myself, right, we're in a H1 uptrend, right? I would say structure's broken earlier, right? But if we get a break of this level, I'm interested, okay? Now, it doesn't matter if this is a liquidity grab or not. All we care about is this gray zone here is a resistance level and it's an area of interest. Again, it doesn't matter if you call that an order block, if you call that supply and demand, I do not care, right? And all I would say to myself, guys, is right, if we break this level, right, at an area of interest, we get a breakdown in structure, I will start selling, right? We'll just play it along one candle, okay? And then all I would say, and then all I would do is this, I would qualify the trade, okay? So I want to put my stop loss above the last swing high, which is here, right? So I want to put my stop loss up here. This is my entry. I've entered on the break of that level. And then all the way down here, the next area of interest would be my take profit. And therefore, the trade makes sense. I'm getting a good risk to reward, right? And structure has broken down at an area of interest. It ticks a lot of boxes. Now, I don't care, right, if this retraces into this level or a fair value gap. It's not important to me, right? Now, if it does, great, but I'm still willing to enter this trade here because my stop loss and take profit give me a nice risk to reward anyway. I would trade the breakout. Okay. And then, as you know, guys, right, if we play this along, it comes down and hits target, right? Now, while this comes down and hits target, right? Okay, there you go, right? Come down and hit target. I don't want to be, I've already entered this trade here and I'm selling, right? I don't want to see this big push down and then I'm saying to myself, right, is that a fair value gap between there and there? That was a bit of a big push down, right? Yeah, we had this big push down. There was loads of, there was loads of space in here which didn't have any orders. Buyers or sellers couldn't get in. Right, if it retraces into there, we've got a fair value gap. I'll start selling. Okay, right, let's say that is a fair value gap and you get an entry in here, right? Great. It still works out the same and we hit target. But why do you care, right, about the fair value gap in here? Right? I just don't. The only areas I would be interested in is that area, right? So price has come down. I've already entered, right? But if price retraces into here, that's a nice entry because what was once support, right, becomes good resistance and we can enter, right? I don't want to spend my time picking out fair value gaps. And you don't need to, okay? So let's go back to real time now. And let's have a look at another example. So this is a good example, right? Because this is the only thing that matters. Okay, so this is the same level, right? These are those levels. We just tested this level and this entry, right? Fair value gap or not, we had a good trade. Okay, and that was based off pinpointing an area of interest and a structure break on the H1. And then does our trade make sense from a support, from a risk to reward point of view? That's all you need. Didn't need a fair value gap, right? Now, this level here is interesting because this shows the importance of a structure break, right? So it's exactly the same level, right? Our area of interest, and we want to take price down to here. We are in this H1 uptrend. Okay, now this is the last low. Okay, now this is the important part, guys. I'm going to put an area through there, right? So this wasn't a trade because number one, tick, we had our area of interest. I don't care if this is a liquidity grab or not. I really do not care. It's not important, right? Maybe it is, maybe it isn't, right? It's probably not because it didn't have the follow through, right? But all I care about is area of interest and then the structure break. And the structure break is that level there. Again, they called it a chock. Just nonsense, right? Now, if we get a break of that level, right, we get a nice big bearish candle break through that level, okay, we can start selling. If we don't, we don't. And sure enough, we don't get that structure break and price just carries on. All right, guys. So this is just highlighting what you need to know with smart money concepts and what you don't need to know, right? Let's just recap. What you do need to pinpoint on a chart are areas of interest. Okay. So here and here. And typically these are going to be places where, right? If it's resistance, these are places you sell from. And if it's support, these are areas you buy from. Okay? Simple as that. You do need to pinpoint those areas. The next important part, as we demonstrated, right? You do need to wait for a structure break. They call it a chock, right? Like a chock ice. I don't know. But we do need a structure break. So when this low here is broken, we can take the trade, right? So area of interest, structure break. The third thing is if this is my target down here, and I've started selling here, I want to put my stop loss above the last swing high, which is here. Put my stop loss up here. And then all I really want to know is, does my trade make sense from a risk to reward? This is your risk. This is your reward, right? And as long as those three pieces of criteria are met, you have a trade. And that's it, guys, right? You don't need to know where the fair value gaps are. It's not that important, right? Because even here, guys, right? You know, I would say you have a fair value gap in here. Big, bullish green candle. It never got filled, right? Yeah, I'm talking about this candle here, right? This would have been a potential fair value gap, right? But at that point, the H1 structure is kind of breaking down. Lower highs, lower lows, right? So the fair value gap is irrelevant because of the price action and the structure of the market. And price just continues down in a H1 downtrend. So don't worry about trying to find these levels, right? They're not important. Okay, all we want to know is when it breaks structure. And as you can see, guys, once we come up and hit our area of interest, this gray zone, we eventually get a structure break. I would say we get a structure break when we break this low with this candle here, right? Then you can start selling, right? Stops up here, take price back down. The only thing that would worry me is if structure broke the other way, right? But as you can see on this H1 example, even right here, it never breaks that high and we stay with structure, lower highs, lower lows, and it stays with structure until we hit our target. And that's all I care about. If price started breaking structure here, right, I would potentially get out of this trade. All right, so area of interest, break in structure, enter the trade as long as your risk to reward makes sense in terms of where you put your stop loss and your target. And that's it, guys, right? That is smart money concepts simplified, and hopefully that makes more sense to you and it's easier for you to trade, guys. And if it does, please don't forget to subscribe to the channel, smash the notification button, and please smash that like button. Also, guys, please don't forget to check out our website. If you're interested in any of our premium trading education, please check out the website, www.simply-forex.com. And also, guys, please come join our trading community. Come join our free Discord channel. All the links are below, and I'll see you next time.